simply put, home equity is just your property's value minus outstanding liens that are owed on the property. The remainder is equity in the property that you can access through a number of ways.
You get that opportunity to get your cash without hurting your first mortgage payment. Rates are, I would say, about 200 basis points higher than first mortgages.
Professional can, of course, speak with A&D Mortgage, and we can guide you on what we offer. Take a look at the economic conditions, where the market is going, what you're looking to do with the money, and make sure that's the right process and the right thing to hit your goals.
Welcome to A&D Market Digest, the show where we delve into the latest developments and insights in the world of finance and investment. I'm your host, Nikita Verindap, and today we have two distinguished guests joining us to shed light on key aspects of the market. First, we have Alex Suslov, the head of capital markets, who will provide us with valuable insights into the current trends shaping the financial landscape. Later in the show, we'll be joined by Mike Pearson, the senior vice president of business development, who will discuss options for tapping home equity. Get ready to expand your knowledge and gain actionable information in today's episode. Mike, Alex, welcome to the studio. I'm glad that you made it again here. Thank you.
Absolutely. Excited to be here. Thanks for the invite.
It's a fun trio. Super excited.
Right? Everything is good? Are we ready to start with the questions?
Absolutely. Fire away.
Straightforward. With the recent economic uncertainties, many homeowners are looking for ways to access their home equity. Could you please explain what home equity is and why it's valuable, especially during an economic downturn?
Sure. Yeah. Simply put, home equity is just your property's value minus outstanding liens that are owed on the property. The remainder is equity in the property that you can access through a number of ways.
All right. That was pretty simple, actually, and I feel like people will understand that. What are the different options homeowners have to tapping into their home equity?
Sure. Well, we primarily see three things. You see a standard cash out refinance, right? That's where you'll refinance the terms of your loan and then maybe increase your loan amount. That increased loan amount would be the home equity that you're drawing out of the property that you could get for cash to pay off debt. Debt consolidation is very popular, or for any number of reasons. Another popular program we're seeing right now is HELOCs. Not something we're quite offering yet, but very popular program. It's treated much like a credit card, but the lien is on the property, so the rates are a little bit more generous than a standard credit card. But you can draw out of it and reuse it. I guess the only downside to that is, like a credit card, the rate is fluctuating, so it can change from month to month depending on economic conditions. But it's another very popular option. And one that we're doing quite a bit of is fixed-rate second mortgages. You're lucky to have the expert on those programs sitting right next to me, so he'll probably speak more on that, but we've been seeing a lot of activity for fixed-rate seconds as well.
Can we actually dive deeper in that one, Alex?
Absolutely. Like you mentioned, home equity forms and arises when you, for example, had a mortgage which was originated some time ago, property values appreciate, and you get more and more equity in your property. You have an option to sell the house and fix the profit, for example, or if you want to stay with the house, which most people do, especially if it's your owner occupied, you go and get a second mortgage against it or a HELOC against it. Some people go and do a cash out, but sometimes when you got your first mortgage at a good rate, which was the case in 2020 and 2021, a lot of people were able to secure 2%, 3% mortgage rates. Right now, to go and get a cash out at a 6-7% does not make much sense. That's where the second liens come in play, and you get that opportunity to get your cash without hurting your first mortgage payment.
How are we doing with the rates on the second liens right now? I mean, the AG mortgage.
Obviously, it is, as Mike has mentioned, a little higher than the first mortgage, because from the lender's standpoint, it's obviously a riskier product, right? If the borrower defaults, for example, there is a first lien, and the owner of the second lien, the lender that has issued second lien, has more risk of not getting his money back in case of foreclosure. So rates are, I would say, about 200 basis points higher than first mortgages.
Got it. To wrap up, what advice would you give to homeowners who are considering tapping into their home equity during an economic downturn?
Well, first and foremost, of course, speak to a mortgage professional that can go through their needs, what their goals are, and find the best approach. Their professional can, of course, speak with A&D Mortgage, and we can guide you on what we offer. But yeah, that's the first thing, is get advice from the right person. Take a look at the economic conditions, where the market is going, what you're looking to do with the money, and make sure that's the right process and the right thing to hit your goals.
We really appreciate your valuable insights. Brokers actually can get more of these insights from Mike when he participates in our July 18th webinar, exploring many ways your clients can tap into their home equities. You can reserve using the link under the video. Please feel free to do it. The process is pretty simple, and I'm pretty sure it's going to be useful and you will enjoy it. Alex, back to you. Do you have anything going on with the guidelines right now? So can we expect some good news for the loan officers and the brokers?
We always do. We always try to improve our guidelines, be more competitive on the market, not just as far as our rates, but as far as the affordability of our guidelines. For example, this week we are releasing an updated set of our guidelines, which would include several, revolutionary things on our non-KM products. The first one, for 1099 income documentation program, we are reducing the number of years that you need to provide of your documentation from 2 years to 1 year. Right now, it's only 1 year 1099 statements that are required for that program. And we are reducing the expense ratio from 25% to 10%, which would improve the DTIs and be a more affordable option of the product. The second thing that we're doing is reducing the required number of years the business owner has to own his business from 2 years to only 1 year right now. You still have to have an employment verification of 2 years or business history of 2 years in the same industry, but you can have a business established within only 1 year instead of 2 to be eligible for the program. The other thing that is also very important is we're introducing cash out for reserves. That's something that a lot of our broker partners were expecting and were looking to have, since it allows for the borrowers not to have cash reserves but use the cash out proceeds.
I actually received so many questions from loan officers and the brokers. They had a lot of issues actually with the fix and flip transactions. I had no idea what to do and how to move the file forward. I believe right now it's going to be pretty easy for them to understand what's going on, and the process will actually go faster and more smooth, right?
Right. For sales, it's much easier. You have less documents to provide and you just go by valuation. That's it.
Pretty easy. That's actually why I love our guidelines. They are pretty straightforward. If you go through them like underwriters do, you can understand the whole mortgage process, I would say.
If you look at all these improvements, are all ways to ease and do more business. So yeah, it's great, especially the 1099 time frames. I mean, that's a big one. People are switching to 1099. They have the history of doing the job, but not have 2 years yet of getting 1099. Great enhancements. Thank you.
Right. You have to be rational, right? And if a person has a history of work performance, of employment, you don't need to request for extra.
Nice. Okay. Amazing. Guys, that was actually super fast, but insanely insightful, I would say. We did our best, and I'm pretty sure it's going to help people that are watching our videos.
Thanks,
you.
Nikita.
Appreciate it.
As we come to an end of another enlightening episode of A&D Market Digest, we would like to extend our sincere appreciation to our esteemed guests, Alex Suslov, Head of Capital Markets, and Mike Pearson, SVP of Business Development, for sharing their expertise and providing us with invaluable insights into the market and home equity options. Thank you for joining us today. I'm Nikita Verenup, reminding you to stay informed, make wise investment decisions, and remember to hit that like and subscribe button to support A&D Market Digest. Until next time, keep exploring the exciting opportunities in the world of finance.